Okay, so a couple days ago, I did make these notifications or postings that said we're headed into a continued bear market on Matic. I was saying about 125 is the next range that we should be getting some more activity in. Right now, it's going to be a bear. There is another post that I made on February 22nd, also stating the same thing. So, with that being said, today we are down 3.05%. Yesterday we were down about that same amount, so we're around 6% just in the last 2 days. Now, overall, our indicator did go from 155. We did have a position on. I'm going to state, as you see in the disclaimer, I am a hedge fund manager of Stathis Strategies. This is not a solicitation. This stream is only for educational purposes only and informational purposes so that you can hopefully become a better trader. I came from the retail side. Now I'm over on the institutional side, so I kind of am leery of making these videos, but I do want to help you guys out to become a better trader. I've literally been doing this for about 15 years now. I started in the stocks and options world. Now I'm over into crypto, and we do have our own algorithm. I've literally made this thing on point for the most part. I would love to share it with you guys, but unfortunately, it is our hedge fund's algorithm. I would say that you can grab a link over in my profile that has my Patreon link where I do mentor, teach, and also do have an indicator that I've built personally to offer to you guys. You can find that link over in our Patreon group, Investors Club. So anyways, the other day, I did get out of about 155 for our fund. The top was about 156.70, so literally just a penny off. This algorithm is pretty strong, and I did make that we are headed down to 120's post a couple of times. I notified people on Twitter. You can find me over there, Facebook, Patreon again, and then here. So definitely, if you're not following me on here on TradingView, I would ask that you please do so. I want to get more active with the retail side and help those people out, and just again provide wealth tips and get that portfolio growing. So, anyways, overall, I've pretty much saved about 20% downside losses. We did perform. I think I did 23% on this trade. And then I protected, obviously got out and protected about 20% downturn loss. And we are waiting to buy back in. Now, we do buy directional trades, but more likely we are a buy only hedge fund. I do provide liquidity, but we do, we do like to buy. I don't ever like to short stuff. I don't believe in it. There are a couple positions that I may short just short term, but I'm not one of those hedge funds that want to go in and drastically change a price of a ticker by any means, because first we do not have the AM, and I will be upfront with you. Have the AUM to control a market like most hedge funds like Citadel, Renaissance, and a lot of those other hedge funds do. However, we do provide the liquidity basis, and that is a strategy that we do offer. But anyways, back to trading. There's three things that I want to say. Always follow the trend. Okay, change your candles if you're not already to Heikin Ashi, which is up here. You want to change those to Heikin Ashi. This will give you a better picture of where or what the trend is currently in. I always tell people, if you're trading, that one of the biggest things that I found that was the most difficult when I first started was not sticking to the rules. If you're in an uptrend, why in the world would you start selling, or if you're in a downtrend, start buying? It literally will be too risky. It'll be too quick. If you literally try to trade 1 minute, 5 minute, Lord help you, because it probably will not work out for you. The statistics are already against most retail traders that say 90% of traders fail, and that's because they either do not follow their own rules or they do not have a good mentor. And most of the time, it's both of those. You try to learn, you get into a position, and the next thing you know, it's against you. And it also takes patience and emotional discipline, because when you put your real money in, it's going to be very difficult to see losses for a short amount of time. It literally sucks. I'm not going to lie. When I first started, the first 15 minutes that I got into an options trade, I lost $600 and I was like blown away. I almost gave up trading. My career in trading almost ended right there. But you know what? That was like the third day that I was trading my real money. I had paper traded using Thinkorswim for about a year before I even traded my real money. And I got to successfully paper trading on Thinkorswim, and then I was like, okay, I can do this with real money. And then when I seen that loss, I freaked out. I pulled. I walked away from my computer. But later that day, if I had not pulled out, I would actually been up $1,200. So for $600 investment, yes, I lost it all in that position. For a $600 investment on a buy option or a buy call option, I literally would have been up $1,200 versus losing my original investment if I just had the emotional discipline to stay in. But there's also that risk analysis and risk tolerance that you need to bear in mind when you come to trading, because there is stop loss needed limitations that you need to take on these trades. But when you get good at understanding at where the trend is, you really don't need a stop loss. And that's not financial advice. Don't take me the wrong way. I'm saying that, do I typically use stop losses? No, because I'm in and out of trades within a couple of days. Now, overnight, I may set one just to protect myself and my fund or my self portfolio when I'm sleeping, just in case it does drop. But typically, it never does, because if you zoom in here and you look at these candles, you're going to see that, yeah, these took a loss where it may have hit your stop loss if you had it set for this last bottom candle. But typically, they always start out in an open. And now this is 4 hours. We can zoom in 15 minutes and everything. But within 4 hours of your sleeping, or 8 hours, you can see that the bottom of the candle didn't even hit the previous candle. So it really doesn't matter. With that being said, if you are an overnight trader, meaning you leave your positions on overnight, you probably do want to use that strategy just for safe haven if the ticker or the coin or whatever you're trading may drop drastically while you're sleeping, so you don't wake up with a huge loss. Now, typically that doesn't happen, but I'm not going to say it won't. So anyways, back to trading Matic and the indicators that I use, the three that are probably the most used overall. I see all these traders when I'm browsing TradingView here, and I see all these channels and candle strategies that they're using and everything. And really, I don't want to say none of that matters, but in my experience, it doesn't matter. The only thing you have to understand is RSI, MACD, support and resistance, and the Ichimoku cloud. I'm going to tell you up front, if you are not familiar with the Ichimoku cloud, you're losing money, you're losing time, and you're cutting yourself short when it comes to trading. The power of Ichimoku, you need to look into it, see where it comes from, see how it was designed, see where it originally originated from, and what it entails. It's highly, highly precise when it comes to seeing where the trend is and getting in and out of positions. And then you need to learn the lagging span line. Now, I've customized mine into certain codes or certain inputs that will tell me on a even more precise basis when it comes to crypto, because crypto trades 7 days a week versus stocks, when to get in and when to get out, and then when there is about to be a boost or a breakout to the trend. We can literally see right here. Now, this is another algorithm that I'm using. We can see where it literally told us when to buy. Now, this is inputs based on a couple factors, like, is it above the cloud, the bull cloud or the green cloud? Is my lagging span line breaking through my trend? And if that's the case, then we typically see the buy sign. And then the sell sign is evolved from the lagging span line crossing over into our trend. I'm telling you right now, that is one of the main indicators that you need to learn. From a hedge fund manager perspective, I even use this myself, and I've been really successful at it. If you do some research, Timothy Sykes had one of his students back then that were doing the breakouts, early morning, late night breakouts, the gap ups, gap downs, strategies. And he even said and this is not Timothy that said this, or Tim, he didn't use the Ichimoku. I think he does now, maybe. I haven't been following him for a couple of years now. But one of his students that was very, very successful said that when he started using the Ichimoku cloud on a weekly, daily, and 4-hourly basis, he became even more successful. So let that be known. Do your research and learn Ichimoku cloud. So now we're going to get into some analysis. I don't even know if I've got chats open or not. Looks like somebody followed me. So anyways, we're going to get into some analysis. Now, the top 10 coins usually follow Bitcoin trends. So if I look at Bitcoin right now, we're going to see that it's typically in the same trend right now. Exactly. So same pattern on the chart. To me, it's pretty much useless to go through all these coins with you guys, because most of these coins trade with Bitcoin, Ethereum. I'll look at ETH just out of curiosity, see where we're headed with that. Same thing, we're on the downside. So Ethereum probably coming in at 1531, 1582 ranges. I don't want to say guaranteed, but I can say that with my knowledge and how to read these charts, 1535 is my opinion that will most definitely hit within the next month or so. We'll see some bears for a couple of weeks now. That puts us into late March, early April, that the bulls may take over. But for now, guys in the crypto market, I'm just not seeing any bulls. I would say that maybe short term, maybe within a day time frame, you may get some days that are bulls, and that's it. But long term, we're still in that downside trend right now. So Litecoin, if anybody trades Litecoin, where's Litecoin BT? Let's just see if they have it. Same thing. 88 or 89. We're already at that first take profit point, 92. So we came in from 105 down to 92. And then we probably have some more points to be lost on Litecoin. Here's some news coming in. Let's see. Kevin O'Leary says crypto exchanges will keep going to zero until this happens. I don't think they'll go to zero. Now, that's my personal opinion, just like it is Kevin's. But will they go to zero? I think with the FTX, the Celsius, stuff like that, it has lost some investor sentiment. But really, if you look at the long-term visionary aspect of crypto, the fundamentals are there. We do need crypto in our society. We need it in our ecosystems. Governments need to get off their hands, quit setting on those hands and start utilizing crypto. We see that here in the U.S., the SEC is constantly going after us for every little thing. I think there needs to be better leadership to let the pearly gates open to allow crypto really be used for what it's worth and what it's meant to be used for, not keep attacking and beating it down. I mean, our GDP literally is shrinking compared to other countries because of the lack of leadership that we have and the lack of understanding and intelligent mindsets that it has regulating the crypto industry. We know that regulation will come, but it has to be with the right people leading that charge. Random cryptocurrency soar over 200% on big Coinbase news. We saw Coinbase start. I noticed when I went to OpenSea, you can now connect your wallet to Coinbase wallet for NFTs. So that's probably what they're talking about. Bitcoin sees sharp drop to 23 level. Key reason why. I want to say this. There's always this news that comes out to pinpoint the why on the chart, and the charts don't lie. I think it's literally, I don't want to say it's guided to be predictable, But if you read the chart and understand that a trend can only go so far, I mean, it can go to infinity, don't get me wrong, but a trend typically goes up 20, 30, 40, maybe 50%, and then it drops back down just because trader and investor mindsets, right? We eventually want to take profit. There's always these news sources that come out and say, this is why. I'm going to tell you why. It's because I've made enough profit. I'm happy. I'm closing out my positions, and I'm waiting on the next buy. That's the honest truth. It's not, oh, the news happened and we just so happen to be the lagging span starts to hit our trend and now we're out. No, the news is just there, but the real reason is on the charts. Algorithms from huge hedge funds are taking their profits. Manual traders are taking their profits. Retail traders are freaking out. They're getting out, losing money, whatever they may be doing over there on your guys' side. They're losing. They get out. And that's the real reason why. So Ethereum, Bitcoin, Matic, some other coins that are people's favorite, BNB. It's definitely going to be doing the same thing. It's more stable than most. I'm not saying more stable. I mean, but if you do look at the chart, typically when it drops, you have that 250, 220 range up to 350, and it seems to stay within those ranges. We did have a huge breakout here back in the huge bull run in November just last year. We had 391, 394. Looked like it may even hit 396. So there's a crypto analysis for probably I want to say early April. It is what it is. You short-term traders that are doing 5-minute, 15-minute charts, you'll definitely see some volatile movements, but you're not going to get. It's just going to be really difficult to trade within the 15-minute time frames. That's why I use 4 hourly, daily, weekly. I see where my long trend is, and then I start playing my positions and strategies according to that. Now let's jump over to stocks. Tesla's always the fan favorite with a lot of people. Let's see what it's doing today. We got a huge drop. I want to say that Elon probably, since Wells Fargo sizes up Tesla's aim to manufacture lower cost vehicles. That's exactly what I was going to say. We know that Tesla dropped their prices on the vehicles, so the earnings calls are probably coming in a lot shorter or a lot less than what they had been doing. So Tesla's price dropped from over 217 down to 196, and as you can see, the 20% moves look like a lot versus crypto. Because crypto is very volatile. You can see a coin go from 50 cents all the way up to $1.50 and then back down, and you see those 100% jumps, and then that's where we get the ROI. Here, you can pick up 20%, but it takes literally a couple. This was a couple days, but you're still 216 down to 194. Not a huge jump or not a huge loss compared to the crypto market, but you do see those pivotal trends where you could pick up some percentages on your gains. So there's Tesla. The algo says right here 192 for the 15-minute. The next pivotal moment is 130. Wow, all the way down to 130, 130, 123. Now I'm not going to say that's for certain, but we are seeing the lagging span line start to dip down. Our cloud is starting to reverse. We are getting into this bull cloud. So there could be that downturn all the way down to 120s. I don't want to say that, but let's just be real. We have a lot of political factors going on around the country and around the world right now. We have a potential outbreak of a war. Not going to warmonger, but I am calling it for what it's worth. We have Russia, China, the U.S. doing its 3 different things. We have Russia doing what it's doing over in Ukraine. So could we see the prices of the stock market fall even more? I believe so. And even the charts show it. So again, the charts show it. Here comes the political factors. Here comes the news articles to just make it happen anyways. Let's see what the earnings did real quick on Tesla. I happen to notice it was released. Reported 119, estimate 112. So it did beat. Standardized as 107. So it actually did beat and surprised 5.44%. Reported revenue estimate was 24.66 billion came in, so there was 351 million loss, which is 1.42 was lost, but that's due to the vehicle prices lessening, probably other competitors coming into Tesla's market cap and eating that up. We had Rivian, a couple of other manufacturers, but then Rivian had the recall notice on their vehicles and their trucks. So there were some competitions out there for Elon the last couple quarters. Another one, Apple. Let's look at Apple. See what it's doing. $1 trillion stock. Hasn't lost much. 174. Now we're at 148. 4 hourly. I'm not getting Indy. Just the sell indicator just happened, and we have already been down. So 155 down to 146. These pivotal volume levels, 131, 127 could happen. The next support line is 141, 125, 59 is the next supports. So again, the stock market also, I don't want to make any, I don't want to make you guys think this is financial advice. This is just my opinions. But I'm stating what I feel comfortable when I say something. The charts usually don't lie. So Apple, again, coming down. SPY, let's take a look at that. Also collapsing. I know a lot of guys were putting in their puts. Made a huge gains off of those puts for SPY. I even had a couple people reach out to me and ask me my thoughts, and they were up 200%. In their call or in their short calls and their put options. So we did come in down to 393, 388. That's the 4 hourly. The daily, as you can see, it did hit the buy, and now we're probably coming into a short position or short notification on the daily even. So I'm not seeing any bull action in either the stock market or the crypto market for now. It is what it is. You can check back with me in a couple of days and see if I'm right, or a couple of weeks. Like I said before, you are going to see those short-term days where you may get some bulls, but that's just people buying in that are falsely being led in the trend, and then it's going to fall back down on them. So anyways, the SPY, trying to think of some other stuff that people may be in. I want to take a look at the VIX, see what the is that really what that is? No, where's it's not showing up here. Take a look at something else. I haven't traded stocks for a while. I was big into. There we go. There's a Contango type. It's always on a downtrend, but usually it pops up on volatility. So we are seeing the Ultra VIX short-term futures ETF, which is UVXY, start to pop. See, we took a look at the SPY. I want to see what news is coming in. Fedmester sees hiking rates somewhat above 5%. Goldman taps its favorite stocks for bullish clients. That's interesting. Let's take a look at what that actually says. There are signs that the stock market is already trading as if a bottom is in, according to Goldman Sachs. Specifically, we note that currently unprofitable stocks on net income basis, where GS analysts estimates imply an inflection either this year or next, have generated a 14 absolute return and have outperformed the SPY. Similarly, stocks and upcoming free cash flow inflections have generated a similar 14% absolute return and have outperformed the SP by 7 percentage points. Okay, so the stocks are. Okay, so ANGI, Home Services, CrowdStrike, Flywire, IHS Holding, Monday.com, Wolfspeed, and we're producing a runway for growth and margin expansion in upcoming years. Monday, wow. So you guys can take a look over that and check those tickers. Again, that's ANGI, CRWD, FLYW, IHS, MNDY, WOLFSPEED, and XMTR. That is Goldman Sachs go-to, it looks like right now. But I don't think we're in that bottom yet. You're probably going to look at 389. Even let's go out to the weekly, see what it looks like. I mean, it's trading in the bull cloud right now, so I wouldn't do any trading myself personally. It could pop out of the cloud and reverse itself. Who knows? But we do see that red cloud coming in. We've already got a green cloud, which was our bull. Typically what happens is when the green clouds come in and you're in a downtrend, you're about to burst through and be a bull, and then vice versa. When you've already been in a bull and you can't go anywhere else, you get into bear territory. So with that being said, I'm not saying that Goldman's correct. They're not far off. I don't think that the SPY, I don't know. The market could drop drastically. As I previously said, we're headed into a potential war. Russia, China doing its things. You're probably going to see self-defense. Lockheed Martin, for example, their stock usually starts outperforming in these geopolitical times where things start ramping up. More defense material needs, missiles, stuff like that, airplanes, all the self-defense stuff starts going up. Smith & Wesson. Let's take a look at that stock. Where's that? Yes, SWBI. Is there any news? Buffalo, New York sues gun makers, accusing industry of fueling violence. News makes me sick. Smith & Wesson brand earnings. Sales decline in fiscal quarter 2. Declares dividend. Smith & Wesson Brands Incorporated reports Q2 sales of 121 million. Okay, so where's the... Is it in daily? Oh, there it is. All right, so let's take a look at their earnings real quick. I'm kind of curious to see. Estimate is 23 cents. All right, so 23 cents on the dollar. Revenue 125 million. That is set through. Okay, so 2nd March. Would I say that Smith & Wesson's earnings will probably fail or be on a decline for this quarter? I mean, if we take a look between last quarter and this quarter, there was more money pumped into it. I'm not saying that's the only factor that we need to look at, obviously, because inside sales is what the overall final decision comes down to. But we do need to take a look at their financial statements within. How you can do that, you can go to sec.gov, type in the SWBI, take a look at their last earnings and see how much cash flow they had, see their reinvestment percentages. I taught this in my Investing with Chris website years ago on how to find the intrinsic value by using things like Guru Focus. There was another one I'm trying to think of what I was using. Can't think of it right off the top of my head, but it literally gave you the immediate intrinsic value and told you whether or not the stock was above value or undervalued. So I'll try to think of that and post it in the comments to this video later on so you guys can have that. But that is where you want to take note when you're trying to beat earnings or play an earnings type strategy. I usually play it safe during earnings. I look at stuff in the long-term vision and where we're at in the trend. I'm an algorithmic strategist only. We do have long-term positions. I do have long-term positions in my personal portfolio, but to minimize risk for my investors, I do what I do best, and that's what most hedge funds do, is continually in and out of positions. That's just the best way right now in such a market of crypto. Now, stocks, a little bit different, but over in the crypto market, that's what I do to protect my investors. We've seen 401ks, IRAs plummet. So people typically come over to us as hedge fund managers to safeguard their portfolios. High net worth individuals usually want to safeguard their investment and not lose it, because that's one of the most stressful things to do, is finding somewhere to place your money. So anyway, Smith & Wesson, I'm not even going to say anything. I'm not going to comment on this, because I think that with the geopolitical or the political evolutions or things that are happening around the world, I think that sales will start ramping up. Yes, the Biden administration here in the U.S. has literally said, let's go after your assault weapons. And that guy doesn't have a clue with what's categorized in assault weapons. And he wants to just go after everything anyway. So with that being said, you have the government trying to ban weapons while you need weapons in time of war. So it's just really hard to comment on this section. I would say that given the current trend, you're just probably going to be a bear for a while. Maybe $7 range, $6.93. Play it out to the bottom of this volume where the sales and orders are in at $4.40. That's my only comment, really. Let me see if there's anyone else commenting in the chat. I don't see anything. So anyways, that's just my market analysis of where we're headed. I think that we're going to see at least a month or so of continued bears defeating us, beating us down. So if you're a shorter, good for you. I don't like short positions just because of the risk, but do we look like we're in a bear market? Most certainly. So anyways, I hope this stream has helped. I'll try to do these more often. If you guys have any feedback, comments, or want to see something in the next video or next stream, let me know. Make those comments, and I'll be glad to discuss it. So anyways, happy investing. You can find me on a few areas: investingwithchris.com, warriorwealthsolutions.com, and stathusstrategies.com. You can find me over on Twitter too. So anyways, that's it for this video.